monetary policy support. The effectiveness of these policy measures became evident with fast-paced recovery. The economy stabilized in the first quarter of 2019 itself, when it clocked a GDP growth of 6.1% as against 5.8% in the fourth quarter of the preceding year. It registered a strong rebound of the second quarter, when the growth rate rose to 7.9%. With the advanced estimates placing the likely growth for 2019 at 7.2%, we are indeed vindicated in our policy stand. The final figure may well turn out to be higher when the third and fourth quarter GDP estimates for 2019 become available. This recovery is very encouraging, for it has come about despite a negative growth in agriculture sector. More importantly, it is the result of the renewed momentum in the manufacturing sector and marks the rise of this sector as the growth driver of the economy. The growth rate in manufacturing in December 2009 was 18.5%, the highest in the past 2 decades. There are also signs of a turnaround in the merchandise export, with a positive growth in November and December 2009 after a decline of about 12 successive months. Export figures for January are also encouraging. Significant private investment can now be expected to provide the engine for sustaining a growth of 9% per annum. With some luck, I hope to breach the 10% mark in not too distant a future. A major concern during the second half of 2019 has been the emergence of a double-digit food inflation. There was a momentum in food prices since the flare-up of global commodity prices preceding the financial crisis in 2008. But it was expected that the agricultural season beginning June 2009 would help in moderating the food inflation. However, the erratic monsoons and drought-like conditions in large parts of the country reinforced the supply-side bottlenecks in some of the essential commodities. This set in motion inflationary expectations. Since December 2009, there have been indications of these food prices, together with the gradual hardening of the fuel product prices, getting transmitted to other non-food items as well. The inflation data for January seems to have confirmed this trend. Government is acutely conscious of this situation and has set in motion steps in consultation with the state chief ministers, which should bring down the inflation in the next few months and ensure that there is better management of food security in the country. Consolidating growth. Madam Speaker, managing a complex economy is a difficult task, more so when it is a growing economy in a globalized world. And yet, choices have to be made, and they have to be well-timed. After successfully managing the effects of the global slowdown, we need to strengthen the domestic macroeconomic environment to help consolidate the rebound in growth and sustain it over the medium term. We need to review the stimulus imparted to the economy and move towards the preferred path of fiscal consolidation that facilitated the remarkable growth in the pre-crisis 5-year period. We need to make growth more broad-based and ensure that supply-demand imbalances are better managed. The success of the fiscal stimulus in supporting domestic demand could be traced to its composition. The approach of the government was to increase the disposable income in the hands of the people by effecting reductions in the indirect taxes and by expanding public expenditure on programs like the Mahatma Gandhi National Rural Employment Guarantee Scheme and rural infrastructure. Now that recovery has taken root, there is need to review the public spending, mobilize resources, and gear them towards building the productivity of the economy. In shaping the fiscal policy for 2010-11, I have acted on the recommendations of the 13th Finance Commission. It has recommended a calibrated exit strategy from expansionary fiscal stance of last 2 years. The Commission has recommended a capping of the combined debt of the central and the states at 68% of the GDP to be achieved by 2014-15. As a part of the fiscal consolidation process, it would be for the first time that the government would target an explicit reduction in its domestic public debt-GDP ratio. I intend to bring out within 6 months a status paper giving a detailed analysis of the situation and a roadmap for curtailing the overall public debt. This would be followed by an annual report on the subject. Madam Speaker, I am happy to inform the honourable members that the process for building a simple tax system with minimum exemptions and low rates designed to promote voluntary compliance is now nearing completion. On the direct tax code, for wide-ranging discussions with stakeholders have been concluded. I am confident that the government will be in a position to implement the direct tax code from April 1, 2011. On goods and services tax, we have been focusing on generating a wide consensus on its design. In November 2009, the Empowered Committee of the State Finance Ministers placed the first discussion paper on GST in the public domain. The 13th Finance Commission has also made a number of significant recommendations relating to GST, which will contribute to the ongoing discussions. We are actively engaged with the Empowered Committee to finalize the structure of GST as well as the modalities of its expeditious implementation. It will be my earnest endeavour to introduce GST along with the DTC in April 2011. While presenting the budget for 2009-10, I invited people to participate in government's disinvestment program to share in the wealth and prosperity of the central public sector undertakings. Since then, ownership has been broad-based in Oil India Limited, NHPC, NTPC, and Rural Electrification Corporation, while the process is on for National Mineral Development Corporation and Sutlej Jal Vidyut Nigam. The government will raise about Rs 25,000 crore during the current year. Through this process, I propose to raise a higher amount during year 2010-11. The proceeds will be utilized to meet the capital expenditure requirement of the social sector schemes for creating new assets.